somebody came along a few years after Bitcoin and said, hey, Bitcoin is great for all the reasons I described, but what if we could add programs to Bitcoin? Meaning you could actually have programs inside of Bitcoin. We call these programs smart contracts. They're smart because they run out on the internet without a trusted third party. So you're not using a cloud service to run your software. You're using the entire internet to run your software. That was the idea that Vitalik Buterin, the creator of Ethereum, was to basically extend the idea of Bitcoin with smart contracts. And again, that became Ethereum. And so Ethereum effectively acts as the world's computer. What do I mean by that? So the world's computer is different from client server, where you have an application running on a server and you can access it via your smartphone app or a web browser. It basically uses all these nodes running all over the internet to run. And it used to use a proof of work model very similar to Bitcoin to run these smart contracts. Okay? And because of the computing power and energy consumption required by Bitcoin, the Ethereum community decided to migrate to a different technology platform called proof of stake. There's a lot of resources online about how proof of stake works, what it is, but the most important feature is it uses 99% less energy than, or more percent less energy than Bitcoin itself, and sets Ethereum up to scale to Visa and MasterCard-like numbers, meaning Bitcoin itself is not very scalable, and it's not meant to be. Again, it was not meant to be efficient. It was not meant to be scalable. It was meant to solve one problem, and that was to be decentralized and be completely trustless. And it does that incredibly well. Whereas Ethereum, because it's meant to be the world's computer, actually does need to scale. So what they need to do is they need to make a trade-off, which you're always going to have to make now in this new kind of blockchain world, between a certain amount of scalability and a certain amount of security, which proof of work provides for Bitcoin. And so proof of stake is setting up Ethereum to scale to Visa and MasterCard-like numbers over the next couple of years, okay? And there's a lot of resources you can go to online around some of the new technologies that you're going to see that help Ethereum to scale. So this is part of the point I was trying to make before, that with all of this stuff, this bad stuff that people are hearing about online, about exchanges and whatnot, the technology here is plowing ahead. Bitcoin was upgraded last year. Ethereum was upgraded last year. It's about to be upgraded again in the spring, another major upgrade. And these upgrades are super important for Ethereum to become the backbone for the future of banking, gaming, and a whole bunch of other applications that we can talk about. All right, and so now there are competing technologies to Ethereum, right, that offer smart contracts. Some of our viewers here maybe have looked at them to buy the tokens, but Solana would be one, Cardano would be another one, and there are others. Okay, and they're all basically those levers that I talked about. They're using the levers in different ways to make different trade-offs, right? And that services different communities over time, and the competition is great. Now, from a price perspective, because all these tokens are publicly available, they do kind of tend to move in sync, right? With the exception that it all kind of moves with network effects. So the stuff that gets the most network effects is the most volatile, up and down.
And is price simply a function of demand and supply? Is it basic economics here?
No, it depends on your definition of basic economics. But if you actually look at price charts for things like Amazon in the 90s, when money was really cheap, it looks a lot like what was happening with Bitcoin and Ethereum at similar points in time, plus the network effects of adoption, right? So folks like Raul Paul from Real Vision, others have looked at this from a macroeconomic perspective. We've looked at it as well. There's three things that really matter for exponentially growing technologies when you're trying to price them in public markets. Number one is money supply. Things that move exponentially get an outsized price movement when the money supply is increasing. That's number one. And that includes tech stocks, the FANG stocks, et cetera, et cetera. And they also are more volatile to the downside.
And the reason for that, Bill,
Investors have more money. The investors have cash that they have to put somewhere with the expectation that the money is free and that there's more money coming because the money's free. And so the expectation is these things are growing faster, so we should put the money there. Makes sense. Okay.
Yep.
Like Tesla, right? It's not because everybody thinks Elon's a genius. It's because the damn thing's growing so much faster than everything else. But in a down market, when they're tightening the money supply, the things that move exponentially tend to move down faster. It turns out crypto is no different in that regard. So that's point number one. Point number two is it's relative, as I said, to exponential growth. So if you have an asset that is growing exponentially, like Amazon was in the late 90s, right? It got the huge benefit of the move up and also lost 80% of its value in 2000, just like Bitcoin and just like Ethereum. I can show you stock charts that are scary because they look, you wouldn't know the difference unless I told you which one you were looking at, right? So, and then there's a third aspect to this, which has to do a little bit more with the application of it, meaning what am I using Bitcoin for? What am I using Ethereum for? But believe it or not, it's the first two that in the early days are driving the price even more, the network effects and the money supply. All right. Now, Ethereum is interesting because it has all of these applications that are live now. There's three kind of killer apps that are already basically generating billions of dollars in revenue. So people who stake Ethereum or process Ethereum transactions actually make a lot of money. Okay, and the money comes from three applications. The first is DeFi, right, or decentralized finance. So back to our primer, what is decentralized finance? So most people have no idea how the banking system works, right? What's the difference between a checking account and a money market account? All I know is if I move my money over to the money market account, I get a little bit more interest. Why? Why is it happening? The average person has no idea why that's happening. There's a reason why it's happening, right? The bank is putting the money to work in repo transactions and other things that actually generate income, and you get a tiny, tiny, tiny piece of that. Okay. Whereas in checking accounts, it's more of a reserve model, and therefore there's generally no interest paid. But there's a stack to the banking system of services and interconnects and interbank lending and Federal Reserve interconnects and SWIFT and all this other stuff that no one has any idea what it means. But it's all necessary to make the current system work. Decentralized finance attempts to take that entire system and rebuild it basically without the banks, without the Fed, right? Banks are closed way more than they're open. Stock markets are closed way more than they're open, right? Yeah. Not even counting holidays, just 9 to 5. Stock markets are closed like 18 hours a day. DeFi is meant to be open 24/7, have no borders, be always on, right? The first kind of like killer, truly decentralized application for consumers, right, was actually music file sharing, right? So the first kind of file sharing sites that you couldn't shut off were an example of a decentralized application, right? So Napster was one that was centralized and it got killed, got crushed, right? And so then everybody moved to decentralized systems. And so BitTorrent being the most famous one, which is where the bit comes from in Bitcoin. And, to this day it runs. Yeah. Whether you like it or not, it's there, right? Just like some PPA. Okay. So DeFi is basically taking lending, Forex, the ability to move between coins, the ability to borrow, the ability to issue equities, and moving all of that into smart contracts running on the Ethereum network or competitors to Ethereum. Taking everything that we've built since Bretton Woods in the United States and rebuilding it on smart contracts.
And Bill, I looked into DeFi. I never dove into any of the liquidity pools or exchanges there, but the returns were crazy that were being offered.
It's very simple. In the early days of these systems, there's not a lot of users. And so the early users are getting outsized benefits of, because there's two parties to a transaction, I have to pay the other party to incentivize them in the transaction. And so that will stabilize into normalized interest rates, fees over time as more and more people enter the system. But the beauty is there's no company in the background making decisions. The network figures it all out on its own. What interest rate do I have to pay to get more money in the system in order to lend more? It's all automated. So when companies were dying, when BlockFi died and Voyager died and Celsius died, FTX died, they were centralized actors making very bad risk management decisions. And we didn't know that until they died. You could look at these smart contracts, right? And they were working just fine. As a matter of fact, some of the companies that died had lent money to these contracts, and they had to basically pay back the loans or they were going to have their collateral liquidated. So they wouldn't pay back the courts, but they paid back the DeFi contracts because the DeFi contract wasn't willing to negotiate. It was literally going to liquidate them. And the court said, oh, we get it. You have no choice. Do what you have to do, right? And so that's just proof that the DeFi model worked. It's getting a massive amount of investment. It will continue to do so. It is the future of banking. But we're in look, the term didn't exist 4 years ago. It's brand new. So we're in year 4 or 3 of 20 in order to rebuild the banking stack. And it's incredibly exciting. And it's accelerating, right? I predict that in 20 years, the highest market cap banks in the world will be based on DeFi rails.